Okay, so I need to make a video about what I mean by risky buy and what I mean by risky sell. And there's an ideal scenario and there's a less than ideal scenario. So on the left hand side, it's the ideal. The right hand side is the risky. And we don't really want to be doing risky. It can be profitable, but then we would one be joining the herd majority and they're normally counter trend. So we need to be careful. And this is like ideal, right, on the left hand side, okay? And so what I mean by an ideal scenario is that the herd are net long and then they add long, so it's a sell. It's like a strong sell. The herd are net short and they add short, so it's a buy. And there's nothing risky about it, that you wouldn't be joining the herd majority, and because they're counter trend, you'll probably be trading with the trend as well. So you'll be technically and sentimentally okay if you stick to the ideal scenario. However, before we were doing risky. I'm not doing risky trades anymore. Today was quite stressful, and the fact that they did this on gold, and it did result in a small down move, and it was fairly profitable, but it was also very stressful because ideally we're doing ideal stuff and not risky stuff. And so the risky buy is when they had a net long and then they reduce long. This is them reducing long. Okay, that movement there is like bullish, right? And if they do this, then that's a bearish sign. However, we can see there's like a little bit of mismatch, because at the big picture we're a sell and we're a big picture we're a buy, but this is them going against the grain. This is them going with the grain. This is them going against it, and this is why this is risky. Okay, it can result in profit, and but like I say, if you join the herd majority, it's likely, because they're so counter trend, that you'll possibly be counter trend as well. So if you were to take a risky trade, you would want to be really careful about SL and TP, and you'd probably want to be using like a trade and stop as well, because if you're doing like counter trend stuff, then you probably want to get out whenever the price reacted and it reversed, because really what should happen is that we are doing stuff like this where we are in an ideal scenario. Risky is obviously counter trend and you join the herd. The ideal is that you're very much with the trend and you're not with the herd. Okay, so I think what I'm going to be doing going forward is that I'm going to completely remove and delete the risky aspect to my trades. My portfolio won't have risky trades in it anymore. I'm just simply going to be doing stuff like this. And now what will mean, because there'll be less trades, it will require more patience, and it might be a case of just seeing what other things materialize on currencies. It doesn't have to be gold. It works really well with gold, as you can see. It's them going long, price fell. That's them selling it, price goes up. That's them buying it, price comes down. Selling it, price comes up, and it works all the time. However, one, we can see that we're kind of going sideways, which is obviously a risk in itself. And secondly, we could probably zoom out and then you see, well, actually, we're not really, we're kind of like quite strong. Okay, and just as a little bit of a fact, look how far away there. I think that's the last time they flipped. Yeah, so they've been bearish a long time on gold. When's the last time? It's bonkers. Wow. These are old lines. We can delete those lines. Ignore those lines. So we had a flip here. 2000. And I've held short since. This is bonkers, isn't it? I can't zoom out anymore. Also, again. Oh, here we go. We had a proper flip here at 1868. Wow. So they're basically held short for a long time. So you've got to be careful about selling into this uptrend, and that's what the risky sell is. And that's hopefully just a quick one there. God, it's pretty crazy, but so this is the risky sell, the fact that they'd gone long while we were a buy at the big picture, and then they sold, and so that's the ideal scenario. Okay, them selling while we're a buy makes sense because then it's just a buy. Okay, that this is like a counter trend move, and this is like the trend move. Them selling while we're a buy, them going long while we're a buy. It creates like a mixed picture. So hopefully that makes sense that they sold it, so we should be coming up, and we should be coming up anyway because at the big picture they're net short. But if they add short, then it's going to go up. Okay, so just a quick one there, and hopefully that's not too confusing. And let me know if it is confusing, then I'll give you some more demonstrations. And basically, we don't want to be doing joining the crowd. That's it basically, and by doing the risky stuff, this is like joining the crowd a little bit as well. So wait until gold flips, wait until it crosses 50%, and then you can look for sells. Okay, so there's a quick one there, and we should be going up higher because of that. And you know, we made a punishment box below for the fact they sold it, and so by them selling it, a big entity has to take the other side of that trade. It's basically a transaction. If they heard sell very strongly, there has to be someone to buy it. Okay, and if they buy very strongly, there has to be an entity to sell it, and they sold it strongly, and so therefore we created a demand. Okay, so this should be going up higher, but let's wait and see.